The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman at this 8 a.m. time frame. Doing the show early today. I have an appointment at this afternoon to do some software development, so I wanted to do this now. Very interesting. This is, of course, the 18th of June, and let's get to the numbers. The E-mini, the S&P E-mini is down 19 at 2765.50. That peak D, remember we had a whole webinar on peak D in early April, and I said these are very important. In the Chapman wave methodology, the D is where other things can happen. That's the fourth highest peak. Well, we saw that once right here, and that was around about the 21st, I think it was. Yep, 22nd of May at 2346.75. Had a sharp pullback to the 2680 level. Runs up to 2796, round number high on the 13th, turns around at leg D. The next day gives you a peak D because there's a lower high. We've had lower highs ever since and lower lows. And even today, there was an attempt to try to rally, couldn't make it above Friday's high or Sunday's high. And now we're trading down 19.25. Will this be the price at noon, when I usually do my show, because it's going to be delayed by 4 hours? I think the Dow will be down quite sharply. How much? I'll discuss that in a moment. But most importantly, I have a target of the 2755.25 level based on the Chapman wave methodology of the left side, right side price time match. And that comes in by tomorrow. We'll see what happens. And the weekly chart, this is really the essence of what I've been talking about for some time. You see this H pattern. Actually, if I can go to the Dow right now, I'll go to the cash because I've already got it typed up. That template that I drew quite some time ago says that this lowercase h, the slide in the Dow from the all-time high of 26,616, January the 26th, down to the low early February of 23,360, that was February the 9th, and then running up to 25,800, then coming back down, the Dow being the only index to break under that March the 9th low. It went to 23,344, only 16 points, but that's a big deal in my work. And that says basically that there should be another arch formation. And that's where we are right now. That's the reason why I had my subscribers to my opening call switch from the long side of the Dow to the short side on Thursday. Now, what's really important about this is that within the context of this arch formation, until the Dow breaks under 24,800, I'd actually say this 14-period moving average, 24,720s. Until it breaks under that, the weekly chart is still just in a sideways formation, making higher highs and higher lows. But I am anticipating a choppy sideways part of this summer, early part of the summer, and we'll see what happens. Days young, the reversal was options expiration on Friday. We hit 24,894 in the Dow and sprang back pretty nicely, but still closed under the 9-period moving average. To get a down arrow, I really needed a little bit deeper correction on a closing basis. Everything met my criteria to put a down arrow. I just want to be very strict about it. I like it to be a pretty good close below the 9-period moving average to go to a sell signal. There's a chance that if the MACD closes negative today or tomorrow, that it will immediately go to upgrade to a sell mode. Sell signals to start. And okay, now let's go on. I'm going to go to the YM. This is continuous contract of the YM. The YM is in fact taking out Friday's low, and that put that little inverted V-shaped pattern right there. That gives you that double camel hump. You know, I like to have these expressions in the stochastic and the MACD, which says that if the stochastic goes sharply under 80% within a few days of breaking above, there's a real good chance that you've made a rare, it's like almost like a rogue wave, spike to the upside that should fail, take you pretty much down toward the low that was made recently, and that's in the 25,300s. Let's see what happens. Days young, we're at 25,900, down 200 in the Dow E-mini futures continuous contract. The NQ, and this is going to be very important because the NQ had an alternate count in the Qs, but for my NQ continuous contract, it's a very clear peak E that was made on Wednesday, the 14th, at 73.21, round number high, 00. Trading right now at 72.23. That's a pretty big pullback, but we haven't closed under the 9-period moving average. But the MACD is turning down, still positive, but turning down. Stochastic still very strong at 90%. On balance volume is turning down. So and from a peak D, we're going to be watching this real closely. Why? Because if the NQ trades under 71.70, closes under 7,200, that's going to confirm there was a peak E, and the daily chart is in a sell signal close to a sell mode. Weekly chart is still in a leg C, probably a peak C. Okay, now let's get to the QQQs. I want to just show there's a relationship. F/C, an alternate Chapman wave count. All the criteria are met here for a C. It could even turn around later in the week and go above 177.89. But the reason why I developed this alternate count is to say, be careful, because if you just continue the alphabetization of the consequential A, B, C, D, E, F in the count, we're at F, and the on-balance volume is turned down very sharply. Relative strength is not as strong as it was back at 175.93 in mid-June. I'm watching this real closely. So in the meantime, back at the ranch, the weekly chart is still very strong. So I'm giving it the benefit of the doubt. We do not have any trades on the Qs, but I am suspecting that the Power Shares QQQ Trust NDX 100 ETF is about to pull back sharply. And if it closes under 175, it's at 175.33 right now. That's the start of a move to the downside. I would have to say it's under 174.20. That would confirm for me that it's a peak F top and not an alternate count. Whew, that's a lot of work. IWM, let me go to the IWM right now. IWM trading at, no trade, 167.81. Sideways consolidation since the 167.94 peak D. How many peak Ds and Es have we seen? And how many round numbers? Let me tell you something. Over the weekend, I took the chance. I should have taken much more time, but I really wanted to do. I love when I can just free think in the market. So yeah, you are 21. No, about 19 slides I sent out to my subscribers starting on Saturday, ending this morning at about 7:45 with my Traders Corner. And they're all very important, but the most important of all the charts that I looked at over the weekend was the IYC. The IYC is the consumer iShares US Consumer Services ETF. I couldn't get it in anything else but leg C. Huge move to the upside. I'll talk about it because it has Amazon, it's ready, Home Depot, it has all the best of the best. Up next, there off this Basil Chapman. It's now 8:14 in the morning before the market opens up.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And I believe there's a little difficulty in the charts coming up. I hope that's not the case, but it seems like it probably is the case. It doesn't matter. I'll explain everything I'm looking at here. The IYC is the iShares US Consumer Services ETF. In the weekly and the monthly chart, it's gone to a leg E. It's walked the 9-period moving average. It's made a beautiful cup formation, broken out from the previous left side resistance levels, and is now pushing to new all-time highs. That is on Friday. 198.53 was the high on the week of the 2nd of February. And then it pulled back sharply to the 9th at 175. So that's, what am I looking at? 22 points. That's 11%-ish points, percent. And then it bounces, makes an arch formation, comes back and has a successful retest at the 175.36 level. Now, you say, big deal. It's only 13 cents above the previous low, but the MACD and stochastic was still coming down. So that was a positive divergence. What's really important is that it was successful. The MACD and stochastic have turned around. The MACD crossed positive as the price went sharply into leg C. I could call it an alternate count. I see no reason why I should. There's a leg C right now, all-time high. My suspicion is that it could pull back to the 190, 188 level. That's going to be the big test. Then I might have to change the lettering and say, hey, that wasn't E. We're coming down for more time and more price. But this is a leg. There's no other way I could count it in the daily chart. I could have made it an instant restart. A, B, unusual. This is called the Chapman Wave. I have a special thing that I gave subscribers over the weekend. It is a study. I like to make studies for so that everyone's on. We try to be on the same page, understanding the methodology that I use. And I had a study of the. It's called the Chapman Wave. This is the unconventional Chapman Wave flat base restart. It sounds like what kind of title is it? The title actually explains exactly what it is. It means it could have been an instant restart, but instead it keeps coming back and it creates a base, and the base keeps getting tested. So this could be an alternate count. I could call it a D, but this is a little elaborate because the MACD and stochastic are still so strong. So it's still going to be the leader. Let's see how it pulls back, and then I'll do some other things. Now, what we're looking at is within the context of the different sectors, and what I spent a lot of time on over the weekend was discussing the fact that there was a bifurcated market up until now, because you've got something like the Amazon iShares, but over the last, from Tuesday going into Friday's close, I kept mentioning one of the techniques that I use, and this goes back to the crash of, before the crash of 1987, where the day of the crash, you saw an incredible number of round numbers. And that what that was just fund managers saying, get me out at 44, get me out at 36, buy at 40. They didn't even have time to say and a quarter, because we used to use quarters and eighths. They just got out. So that confirmed for me a magnificent a buy signal on the 20th. I said there should be within 18 months new all-time highs. Well, in this particular instance, what we're looking at is a whole bunch of round numbers at the top. I mean, look at this. Amazon, one of our leaders, goes to an all-time high. What happened to my notation? All-time high at 1,724.80 on Thursday, and opens, where is it? Opens the next day at 1714, round number. These are not accidents. These happen because of fear or somebody saying, I've just got to buy Amazon, just buy it. And that's what happens at the open, because it made an all-time high. And I watched that very closely. Look at the SMHs. Is this incredible or not? This is an ETF. This isn't a single stock. It's so hard to get a round number anywhere on an ETF because it's a composite of 20, sometimes more, sometimes less stocks. SMH's Market Vector Semiconductor Index makes 112 round number high, peak E on the 7th. So we've been short. We were long. We switched to short. Now we're short. We short the Dow. All I can say is just be really careful. I've been saying that for the last week. This is just a moment where the news is probably going to catch up. This is a period where I think we are fraught with anxiety because everywhere, in fact, this is now something new. Everywhere I go, even playing tennis yesterday, I'm busy putting my racket away in my bag, finished sweeping the court, and the group next to me, the four players next to me, I was playing singles, the four players next to me, about to play doubles, they were lambasting President Trump. They just went on and on, one in particular, talking about tariffs. He said tariffs will never work, etc. I said, you don't know. Things are a little different this time. So things are a little different this time. So all I can say is this is a period fraught with anxiety, and I think it's going to be reflected in the peak Ds and Es that we've made in the daily charts, and that's why my bias right now is to be looking down. That's the reason why I had those many charts, Dow slides, overview, a triple yield. Look at the yield. I haven't finished the yield here on the TNX. I wonder if that's current right now. Down 20, so it's at 29.04. What's really important, if you're looking at the weekly charts, as I showed my subscribers, every Saturday where I start my Monday charts and send them out Saturday, Sunday, Monday, I said there's a real good chance that the yields up in the upper register of the most recent correction could in fact start to slide as the TLT rallies, because wood, which is the iShares Global and Timber Forestry ETF, finally made a possible peak F in the weekly chart, and the home builders, the Philadelphia Housing Index, it hasn't been able to rally. So this is a very important moment. Why? Because if the TLT trading right now up a little bit, it's up 27 cents at 120.65. If the TLT starts to trade over 121.54, the 200-period moving average, it's probably going to test and break above the 29th of May's high of 122.52, and immediately we'd be looking at leg C, could even be Chapman wave, overlapping wave to leg C. And if that occurs, it means that money's coming out of the volatility of equities into the so-called safety of bonds, and that's the way you'll get yields. That's the only way I think yields will be coming down at this particular point. So crude oil right now, crude oil is trading down 27 cents. I think it's made a lower low. It's I think now crude oil is kind of done for, at least in this particular phase. I'd say that I thought that the crude oil would hold the 64s, maybe 63s. If it takes that out, watch out, because the 62 level is absolutely imperative for crude oil to hold, because if it fails from there, that monthly chart is starting to break the 9-period moving average support. Not a good sign for crude oil. Basil Chapman, early show, 8:26 in the morning instead of 12:26 in the afternoon Eastern time. I'll be right back after these important messages. Now his futures are down 208.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, everyone. Okay, so let's just do a couple of things here. I'm going to give you levels to watch. Really important for three reasons. One is in the Dow, which has been one of the weaker indices. It was one of the stronger indices. Now it's one of the weaker indices. If the Dow breaks key support of 24,850 on a closing basis, what it does is it does two things. There's a good chance that the MACD will get very close to turning negative. It isn't at this point. And the stochastic at 84%, very good chance it goes under 80%. So if it happens today and not tomorrow, then immediately we're going to get a sell signal that I have no choice. Almost immediately, I have to consider that it's going to a sell mode. Let me give you the same thing. I'm not talking about upside now because I think that we've just seen, last week we saw the highs for this particular phase. So let me just rather talk about support levels. In the S&P is 2761. We're trading right now in the E-mini futures down 18 at 2766. But in the cash, which closed at 2790, 27, just about 2780 on Friday, it's to 2760. A close below that would say sell signal, down arrow. The MACD is going to have to go a long way down to go negative, and the stochastic at 91% to go under 80%. S&P is stronger than the Dow. So I'm going to have to wait on that, but it will get a down arrow. But the actual implication of a sell mode, I need to see a close under 2760. I probably want to see a close under 2760. The QQQ, still strength there on Friday, but it closed at it had a high of 177.89 on Thursday. It's trading at 175.44 pre-market, down $1.54, down 0.87%. My thinking is that it needs to close just to get a down arrow. It's going to take more than a close below 175. It's really going to take a close below 174 to be, at least for me, convinced that now the Qs, which have been one of the stronger indices, is starting to weaken. So those are the numbers to look at. Under 175 is the start. Under 174 says yes. Now there's going to be a much deeper correction in the QQQs. Let me continue. The SMHs, I don't know where they're trading right now. They're down 344 at 106.86. We were long for a long time from the 101 area. We went to 112. We switched to short the other day. We are now short via one of the instruments. But most importantly, if the SMHs close below 108, the pre-market looks like they will, but I'm talking about 108. That's suggesting that the SMHs, the semiconductor index, which led the market up and led the market on the corrections, could be leading us down by failing at 112 round number high the other day, not going to the all-time high above 114.55 made in March of 2018. It led the way up. It's led before. It's led the way down in the corrections. Is it this time saying, just like the Dow and the S&P, which failed to take out the January 26 high, that this is a key moment, because if the SMHs start to trade in the 105s and making 107 to 108 now resistance, I think we're in for a deeper correction based on this one index. We'll see if I'm right or wrong. Now, here's something else that's very important. The IWM, which led the way up, is only down 97 cents right now, pre-market, 166.84, down 0.58. It has been a monster. It broke out, it led, it's in a leg B. I'm absolutely sure there's a leg B in the weekly chart, but I've been talking about the monthly chart. Let me show you something here. You might not be able to see the charts, but you remember it, because remember I spoke from the 2009 low, there was an up channel. And from the green line that I've been showing for a while, with resistance from the 86.82 level back in June-ish, I think it was, of 2011, and then bumping into what I call the Chapman Wave Inside Track. I spoke about this on Wednesday night's webinar. There is time. You can still, this is a webinar that was not daily specific. It was for the summer at least. Looking out at 2018, everything there is pertinent, very pertinent to what's going on right now. If you want to get my newsletter free, well, you'll pay for it, but it's a guarantee. If you're unhappy, you can get a money-back guarantee. You'll get my webinar, and that webinar I think is really important. The iShares, what we're looking at, the Chapman Wave Inside Track resistance zone, again, was hit at 129.10 back in June of 2015. That was the deepest slump below the up channel support, went to 93.64 February of 2016, and then it's been screaming higher, walking the 9-period moving average, and it finally went above that green trend line. But the month has got another 2 weeks to go. It's not over. So let's see where this closes, because The MACD is very good. Stochastics at 79%, but starting to show a little bit of a little softness. But in the meantime, magnificent 3 bars in the monthly chart of the IWM Russell 2000. Let's see how it comes out here. Gold. Gold is up. Now, if ever there was an opportunity for gold to move, it was last week. All this uncertainty and everything, and now it's up $3.70 at 12.82. Remember, this is the early show. It's going to be recorded to be played again at noon. This is 8:36, so it's 12:36 if you're listening to my usual time slot, but it's 8:36 live right now. And the gold futures are up 3.8 at 1282.3. This after Friday's smash to the downside. You see this chart pattern? I spoke about this with Tommy Jr. Remember, I did the NADAX platform show with him on Friday. And I said, be careful, because this lowercase h, which really is basically a rectangle, is a pattern that I talk about in the Chapman wave called the propeller shaft, where you come down sharply, you go sideways for a while, and then you break to the downside. It has the connotation of stalk leg formation, but it has other implications. So this is saying very clearly that the break in leg E in the weekly chart, the arch over in the monthly chart, is all within the confines of where we've been. But if gold breaks down and goes under 1273, it's at 1282 right now, I think we're going down to the 1260s. Got to be real careful. And that's key support in the monthly dash line, uptrend line, 1260. So let's watch this real closely. This is an opportunity for gold to move. Silver got smacked on Friday after a peak E in the Chapman wave. It's trading at 16.54.06 right now. That is a deep correction, puts it right back into the pattern, this rectangle formation in the weekly, rectangle formation in the monthly. Boy, this is a chance for gold and silver to move. They better do it now, otherwise it's a problem. However, the long position that we've had in the dollar from 90, and it's trading right now 94.76, down 3 cents, broke out above the previous high that was made at a peak F top in the Chapman wave on the 29th of May at 95.03. Pulls back to a leg D. Remember, that was the 120-minute chart. So it pulls back to leg D in the daily chart at 93.19 on the 14th. And that same day, Powell with Draghi's with Draghi's statements, bam, it goes to the upside, makes a new recovery high. This is leg D in the weekly chart. This is a really good pattern. The dollar is moving very nicely and holding very well. Basil Chapman, target conditions are, the futures are down 216 at an hour before the market opens, a little bit less than an hour before the market opens. I'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So yes, the XLF, which is the S&P Select Financial SPY, has been struggling a lot lately. It's trading at 27.24 at this point, down 23 cents pre-market open, and I'm looking at 26.70 to better hold. Otherwise, it's going to go quite a bit lower. Well, 26.70 there's a trend line that's held 3 times, well, twice, because it started off at 26.76. Next is 26.55. Next was 26, I think 46. Yep, 26.46. And that makes this trend line right here, around about 26.32, really important. So it's about a point lower. I'm watching it, and one of the reasons why I'm mentioning it is because the TLT, I'm suspecting that the TLT, that's the Lehman 20-year Treasury Bond Fund, in other words, bonds, could rally here as we look at the money migrating from the volatility of the market into at least the so-called safety of bonds, at least for now, and that's going to be very important. What I also wanted to look at was, within the context, I always get asked about this, the USO. I did oil just a moment ago, but the USO is trading at 13.17, up 12 cents. It already got smacked on Friday. I just think it's in a trading band. If it starts at 13.05, if this let's say 13 round number low, if it closes under 12.92 anytime this week, I suggest that the 12.61 level in the 9-period moving average in the monthly chart is going to be tested. So now let's go to a couple of things. I'm always asked about Boeing. Boeing, I'd say that peak D that was made at 374.48 with a round number open of 372. There it is, 372 on the 7th, June the 7th. That is setting the stage for a pullback. I've been wrong about Boeing because it went to an all-time high, barely, but it did it. I think Boeing is now in this correction camp. No, it hasn't even, it's only from 374 to the 350s. It's not a correction camp. It is going to go into a correction camp if it starts to trade under 348 to 346 support in the next week and a half. That's really important. So now what I want you to do is, I had a question about the EEM. Yep, I said I'm not liking the EEM at all last week. Didn't like it. It's trading now down 61 cents at 44.62. It's the iShares Emerging Market ETF, peak D in the monthly, peak D in the weekly. Just be real careful. Now a couple, Euro, EUR/USD. Euro is trading right now, trying to find some support, made a peak D. I knew there was a chart that I was missing. It was the Euro, made a peak D in the daily chart, plummets from the 1.185 level on Friday high to 1.156 low, and trading right now. Then that was on Thursday. Then Friday it goes to 1.154, and right now it's 1.161. There should be a little bit of a bounce here. I wouldn't be surprised if the dollar, if the dollar doesn't break another 58 cents to 63 cents higher, it could have a little consolidation. It's a spectacular move, and that should give gold and euro just a little bit of a bounce before the dollar gets back on track, going to higher highs. So just treat it as a bounce. Be real careful. USD, JPY. This, of course, is the yen USD JPY currency pair. Peak C right made on Friday at 110.90, and is trading now at 110.47. It needs to get to 100. Really needs to get to 111 to show that it has the tenacity to be able to test the high that was made on the 21st of 113.39. So important moments right here. I'm just going to emphasize over and over again, as I have been over the last few days, be careful. I said this is a good time to raise cash. You don't have to be in the short position. You don't have to trade up and trade. I'm just very lucky because with the Chapman Wave methodology, fortunately, while I might miss it because my entry is wrong, it's been giving us great guidance. We have been long for a lot of the move to the upside through May. We managed to switch to the short side right at the confirmation of, before the confirmation of the peak D. I just anticipated based on the 120-minute chart that we needed to be short. We took off the long, stayed with the short, and then was confirmed the peak D doji top on the 11th of June at 25,402. And I'm just going to try to sit with this position because my major thing is that at some point we're going to be back to the bull market. We need to survive and build up cash position. So positions that were fantastic and misses that were fantastic misses because the stocks went unbelievably high, like at Twitter, trading right now down 50 cents in leg F in the daily, but maybe it's an E in the weekly. I'm calling it a C. Man, the technicals are good. And a D in the monthly Twitter, TWTR. I want another chance to get these, and I hopefully won't miss them this time because I spoke about it, but it just never gave a pullback. You can't see the chart right now. I don't think you can. But in the meantime, it just walked the 9-period moving average, had no more than 1 day consolidation since peak D was made on the 29th of May at 34.83. Spectacular action. Now it needs a bit of a digestive phase. So that's really what I'm saying is don't get carried away. And don't get too excited about things. Just keep your head down, keep focused, and say, time for a breather. This is the breather. Is it more than a breather? Well, we'll know. And that's the reason why I'm saying build up a cash position. I just don't see new highs coming on a spur of the moment thing for a little while. So that's just my opinion, one person's opinion. And of course, you'll get a whole bunch of opinions throughout the day from our wonderful hosts here at TFNN. But as I say, that's my opinion. Now, a couple of things I also want to look at within the context of the markets. There have been some spectacular moves in things like HACK, which is HACK is the cybersecurity ETF. Peak D was made at 39.67 on the 14th. On Friday, it pulls back. Confirms. I've got two doji, Chapman Wave, silent dojis in between. It's like a sandwich. And that's saying if at 39.02, if it can come back and test the high that was made at peak E before the breakout back on the 10th of May of 38.33, how it goes into the 37.50s, if it's going to pull back, it's going to be really important because it's a leg D in the weekly and leg E in the monthly. So I'm watching it closely because cybersecurity, come on, this is an ETF you want to be putting into, say, your grandkids' portfolio for the long term because that's going to be here forever. However, I want to, for a trading position and then maybe an intermediate term position, I want to see how it handles the 37s to the 36.50s over the coming week. And if it fails completely, I'll just have patience and wait because we would like to get. We have had it once very shortly, just a very brief sojourn to the upside, but HACK is really looking good. 39.02 right now, pre-market. We'll see what happens. Another one, bots. Now, this is a little different. This is robotics. Bots has made its peak D top back in, what was that, March? Oh, January. So January, the week of the 26th at 27.15. Only leg B because a recent IPO back in 2016. Global Robotics and AI, artificial intelligence ETF. So watch that one. I'll be back straight after this break for our final segment. Right now, if you're listening to the show in the afternoon, it's 5 minutes to 1 o'clock. And the futures early on, now it's down 214.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi, folks. Don't forget, if you're listening to the early show live right now at 8:54, you'll get Larry Pesavento right up next. This is a perfect time for Larry. And then, of course, if you're listening at noon, that's Steve Rhodes. Steve Rhodes has all his techniques that he'll talk about. Another perfect time. So this is a really important moment. And this is 35 minutes before the actual opening bell. The Dow futures are down 211. S&P is down 17. This is a very important day because Friday's rally was an aberration. That was an options-related thing. The market was really very weak, but there have been some sectors that have been very strong. And the QQQ, as I mentioned before, I've just spoken about bots, which is the global robotics. At some point, that'll come on strong again. Have patience. That's all. And if you're in very long-term positions with real nice gains, hey, take a little off just to reward yourself and then sit tight. Maybe you put that exact amount back at lower prices. And the IWM is making this is a double curve now. This is a Chapman wave technique where I use rails. It's like a track, like a rail line, and you've got your parallel outside curve. If the IWM trading down 96 right now, and it's been a leader, but it's just gone sideways in a trading band right the last 3 sessions. If it somehow or other can go to the 168s this week, that's really positive. There's that green arch, but the arch on the base says the close below 166 is very negative. And no, sorry, close below 166 is a negative, but that's just like the start of a move down. But the technicals are suggesting that if there's a trade in the 164.20 to 163.30 area this week, there's a good chance that you're going to see a deeper correction in the IWM, the leader on the upside. So we'll have to see what happens here. A couple of things I wanted to do just as we're about to wrap up. The TVIX, which is one of the instruments that you can trade for the VIX index, closed at 39.85 on Friday. It's trading at 41.68 right now, up $1.33. If it can go into the 42.50s, that'll be the first time it's breaking above the 9-period moving average in the daily chart since it broke down on the 1st of June. So watch that closely. Basil Chapman stepping aside now for the next host, and I'll be back live tomorrow, my usual time. Have a great day and have a great trading position, and good luck. I'll be back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.